For many thousands of accident victims, it's a double whammy. People are seriously injured in motor accidents, often through no fault of their own, only to find that they are not entitled to any compensation from green slip insurance cover. The legal profession says a grossly unfair compensation scheme has developed since the Carr government's reforms, opening the door for insurance companies to rake in super profits. The O'Farrell government is currently conducting an internal review of the system, but has stopped short of calling an independent external inquiry. And many victims are asking why. Caro Meldrum-Hanna reports.
So we're going to go down the coast on the weekend?
Yeah, I'd love to go down the coast, yeah.
Inside this home in suburban Sydney, husband and wife are discussing their plans for the weekend.
Good to get a weekend away with all of us.
Yeah.
The conversation may be unremarkable, but Travis and Renee, who only want to be known by their first names, are much more than initially meets the eye.
I was born with a sight impairment, so ever since birth I've had that. But it really was something that I had learnt to work with.
Determined not to be limited by her disability, Renee broke boundaries, finishing a HSC, travelling the world and working full-time while studying at TAFE. 2.5 years ago, she was about to embark on her biggest challenge yet.
I was in training to do the Everest Base Camp trek.
And what happened?
Well, we were on our way to work at about 6 o'clock in the morning, and we'd just left home, and to the first set of lights that we got to, I remember looking up and seeing a green light, and we were just talking, and I remember and that was it. It was just a horrible sound. It was just being pushed. I just remember the impact and getting spun around in the car and then just stopping. And then I remember the smell. I can't forget the smell to now. The smell of metal. So yeah, and what I found out had happened was another car had run through a red light and hit us.
Remarkably, Travis walked away without any major injuries, but Renee wasn't lucky. Her right leg was crushed, her abdominal area damaged, her jaw was shattered to the point where she struggles to chew and is in constant pain. And the precious little sight Renee still had and treasured was dramatically altered.
Good girl.
I've got a new addition. I've got Holly, and she's my guide dog. Sorry.
Okay. Did you expect that you'd have a guard dog when you were 33?
See, because I didn't need one before. You know, look, she has been a lifesaver, and I love her to death. But the fact that I need her, it was really difficult to get over.
But the biggest shock was yet to come.
In the 2 years since the accident, I've been sent to multiple doctors, multiple assessors.
What figure have they assessed you at? Where have you reached?
I'm currently sitting at 10% exactly.
She was assessed right on the 10%, and you've got to get over the 10% to get the compensation.
Andrew Stone is a Sydney-based barrister and has represented countless victims of motor vehicle accidents in their fight to get compensation from their insurance company. He is now representing Renee.
So at the moment, she's not entitled to any compensation for pain and suffering, despite the fact that a significant portion of what little vision she had has now been seriously affected.
In 1999, then Labor Premier Bob Carr introduced new legislation amending the motor accident compensation scheme, a raft of changes that came with an exciting promise for New South Wales motorists.
Bob Carr made an election promise that he would cut premiums by $100. They never were actually cut by $100. The whole idea was to get premiums down. And we have some of the cheapest premiums in the country. What we also have is some of the lousiest benefits.
The scheme was meant to make accessing compensation easier for victims of motor vehicle accidents, keeping the claims out of the courts and simplifying the process.
I think ultimately what's happened is a system that's more complicated than anything we've ever seen before.
So the exact opposite has happened to what was originally intended.
I think that's right.
Bob Carr hated lawyers, hated personal injury, and in the course of fighting against lawyers, he really has dealt injured people a very harsh blow.
That blow came in the form of a tough new threshold that accident victims had to pass if they were to recover any compensation from their insurance companies.
They put in place something called a threshold, which says unless you've got a sufficient level of injury, you're not entitled to any pain and suffering or damages for the injury. That threshold is called 10% whole person impairment. It's a very academic and dry threshold.
This is the book that the assessor uses to determine the whole person impairment. And the first thing to note is it says very clearly here that it shouldn't be used to make direct financial awards or direct estimates of disabilities. They are asking the book to do what the book's own authors say the book shouldn't do.
Greater than 10% of their whole person. Now that might not sound very high, but in reality is extremely high. And as I said, 90% of people will miss out altogether under this threshold.
Yes, insurance companies try very hard to argue that you're under 10%, and I know there are an enormous number of people who have very significant injuries who don't go over this threshold.
I think the problem is that the scheme design is wrong. I think the problem...
In favour of insurance companies?
In favour of insurance companies.
Under the scheme, every year the Motor Accidents Authority requires insurance companies, through their financial actuaries, to provide the authority with a financial prediction of what amount in claims they expect to pay out each year and what amount they expect to keep in profits. Robert Whelan is the CEO of the Insurance Council of Australia.
Well, every single year the actuaries have got it wrong.
Well, it's not a precise science. You are trying to predict the future.
Builders, when they're building a building, will cost it out and will make a provision for contingencies. One of the easy ways to boost your profit is to overestimate the contingencies. And I have my suspicions that within this system there are significant overestimates being made by the insurers for contingencies about which the regulator's not being tough enough.
730 has obtained this analysis of the annual profit estimates the insurance companies have been providing to the Motor Accidents Authority. They should be at around 6 to 10% annually. But as these figures show, the initial predictions have ballooned. All up, a $1.5 billion miscalculation over 10 years, all in the insurance company's favour.
The actuaries then, if they're doing their job but they've been getting it wrong every single year for 10 years, how would you feel if that was a $1.5 billion super loss rather than a super profit?
All adjustments would be made in terms of the scheme design. As I said before, it's a highly regulated scheme.
Would the actuaries, in your opinion, be doing a good job if in the past 10 years they'd been estimating it wrong to the tune of a $1.5 billion loss?
I think they've been doing the best they can with the available information.
But you're not answering my question. Do you think they're doing a good job if it was a $1 billion loss?
As I said before, that can change over time as well. So it can go from a profit to a marginal return.
With all due respect, that's not answering my question. I'm asking you if you think that the actuaries would be doing a good job if it was a $1.5 billion loss over those 10 years, that consistently every year they were underestimating.
Everyone would have to change their view if they were continuing to make a loss. So yes, the actuaries would have to recast their assessments and their predictions, yes.
And it has happened year after year after year. Which just raises the question, why is the original estimating process going wrong so consistently and always in the direction of favouring the insurers?
Well, why hasn't the Motor Accidents Authority come up with an answer to that question? If they are a regulatory body?
That's a question you've got to ask them.
The Motor Accidents Authority declined 730's requests for an interview. Instead, they provided this written statement.
The Motor Accidents Authority is responsible for ensuring that premiums are adequate and deliver a fair return. The authority aims to regulate a green slip scheme that is fair, affordable and sustainable.
Well, it may be partially affordable, but it's a long way from fair when so much of the green slip money is missing injured people and going to insurance company profits. Where we can lay the blame is on the Motor Accidents Authority, which has been asleep at the wheel for more than a decade.
The New South Wales Bar Association, the New South Wales Lawyers Alliance and the New South Wales Greens are all calling for an independent inquiry into the Motor Accident Authority's conduct and an investigation into insurance company profits. And all eyes are now turning to the New South Wales Government, waiting to see if it will support the growing chorus of calls for reform.
It was something that I didn't ask for, and I'm doing the absolute best that I can. And I'll continue to do that because, you know, I really, you know,
You want it?
well, I still want to do what I love, and I'll continue to do that, and I'll continue to find things that I love to do. But it's just that much harder now.